Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at?
Well, we have to take a look at Nvidia, Paul, of course. And Lisa gave us some of the headlines already. But yes, those shares, again, edging lower here, minus 2% now, so ticker NVDA. And yeah, so let's recap, right? The top line from the results overnight is slightly disappointing. I mean, they're still forecasting sales of $54 billion in fiscal third quarter. That is actually in line with street estimates. But the problem is Nvidia always crumbles under the weight of very, very lofty expectations. And that number is actually lower than some of the top end forecasts, right? And the data center revenue, $41.1 billion, nothing to scoff at, absolutely, but still slightly below the average estimate. And of course, Lisa mentioned as well, the latest news is the potential for the company to sell Blackwell AI chips to China and then giving the U.S. a cut of those sales. We did hear from CFO Colette Kress yesterday in an interview saying that the U.S. government hasn't even indicated how they will put those regulations in place and what the structure is going to be so that the chip maker can make the payments. That is very much still up in the air. So all questions around how that's going to play out probably weighing on the shares today as well.
And you're also looking at CrowdStrike, a very different story there.
That's right, Scarlett. So CrowdStrike actually recovering from some of its opening declines. So ticker CRWD shares are now up slightly, 0.9%. Earlier, that was in the red. And we did get their third quarter revenue forecast slightly below estimates, but it is mostly in line, 1.21 to 1.22 billion forecast for the third quarter. They're also looking at a 2026 estimate that is right around expectations, 475 to 481 billion. Bloomberg Intelligence, though, sounding a bit more cautious on that stock. So they're saying that their softer new annual recurring revenue growth might actually be reflective of slower or limited customer additions. And that could limit the point at which they could grow because new customer gains is just slowing.
All right, Best Buy, what's happening there?
Best Buy, so those shares, ticker BBY, extending those opening declines there. That's now down more than 3%. So again, Best Buy reaffirming their comparable sales forecast. But that's not good enough for investors because other retailers like Kohl's, for instance, lifted their outlook. And of course, we did hear again a line about tariffs. They're saying that tariffs will continue to weigh on its business, especially ahead of that crucial holiday shopping season. One silver lining, though, for Best Buy is releases like the Nintendo Switch 2. That helped offset some of the drop in home theater equipment installations and all of that stuff. And of course, their sales growth snapped a streak of 14 straight quarterly declines.
So you got to wonder whether this is a pause or this is an actual true turn.
We saw some Dollar General, some of the other off-price retailers doing pretty well. People are still spending, I guess, but spending with the costs in mind.
Absolutely, yeah. And the question is whether Dollar General, those kinds of companies need to change the selection they offer to keep those higher income consumers.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.